Right now, the US dollar is, well, it's bleeding. And by all the traditional rules of economics, alternative assets like Bitcoin should be skyrocketing.
Yeah, they really should be.
Right. But instead, the market is just totally flat. So today, we are diving into the Vantage Plus weekly crypto analysis for Tuesday, August 4, 2026. Our mission for this deep dive, figuring out why a weak US dollar isn't, pumping crypto like it usually does.
It's definitely a weird dynamic right now.
Okay, let's unpack this. What exactly broke the seesaw here? Why isn't the market capitalizing on this?
Well, normally you'd see the broader crypto market track right alongside the tech stocks in the US Nasdaq queue.
Sure, they usually move in tandem.
Exactly. But this year, they are aggressively decoupling. Tech indices are just doing their own thing. And crypto it's lagging behind, entirely ignoring the macroeconomic tailwinds.
So if the dollar is weak, which, that should be a massive green light for crypto, what is hitting the brakes?
It's a severe case of fundamental gloom driven by security breaches. The report details this really devastating exploit involving cold card-generated keys.
Oh, wow, the physical hardware wallets.
Yeah, the exact ones people trust to keep their crypto completely offline. They were compromised. Attackers drained 208 Bitcoin recently.
That is wild.
It really is. Across 3 waves of these attacks, we're looking at nearly 89 million US dollars lost.
Jeez. So it's like a sailboat with a great tailwind from the weak dollar, but a massive $89 million anchor dragging underneath.
That is a perfect way to put it. And what's fascinating here is how this fundamental gloom translates directly into the technical charts.
Because investors see 89 million vanish from supposedly secure offline vaults, and they just panic.
Right. They pull their capital out. That underlying fear freezes liquidity. People just, sit on their hands. And when you look at the technical charts, that psychological freeze translates directly into physical ceilings. The heavyweights simply can't break out.
Okay, so let's look at those heavyweights. I'm seeing Bitcoin hovering at 63,447, but it keeps hitting a wall. Why is it struggling so hard to push higher?
Because it hasn't broken a single technical resistance zone since last October. It tried to push past 67,000 recently and just completely failed.
So what does this all mean for the momentum? Are we just trapped in an endless hallway of floors and ceilings?
Pretty much. Right now it's trapped. It has to hold the 60,000 support floor, but sellers keep swatting it down at the 65,000 ceiling. It's a prolonged bearish trend where sellers just dominate every minor rally.
And Ethereum seems stuck in the exact same hallway. Is it 1,876, trying to get past?
The 2,000 resistance zone, yeah. 2,000 is a massive psychological barrier, but there's a technical tripwire Ethereum needs to cross first.
Which is what?
It's 50-day moving average. That's essentially its average price over the last 2 months. Traders use that line as a baseline gauge for momentum.
Got it.
So until Ethereum crosses that average, trading algorithms view it as weak, keeping that 2,000 level acting as a very heavy lid.
If the heavyweights are stuck in a hallway, the altcoins look like they're actively fighting gravity. Take XRP. It's at 1.0795, just clinging to life right around $1.
Yeah, it's barely holding on.
And the report warns that if it slips below that $1 parity support, it could plummet down to 50 cents. Why is that $1 line such a cliff edge?
Well, in trader psychology, round numbers act as massive tripwires. $1 isn't just a price, it's a symbolic baseline.
Right.
If XRP falls below it, automatic sell orders trigger and panic selling kicks in.
Then you have Solana, fading from low to low,
Yeah.
currently at 73.17. Here's where it gets really interesting, though. The chart mechanics here are brutal.
Oh, absolutely.
The report mentions that previous support levels are turning into resistance zones. Walk me through that. How does a safety net suddenly become a concrete ceiling?
When an asset drops through a support line, a price where buyers previously felt safe stepping in, all those buyers are now trapped holding an asset that's losing value.
Oh, I see.
The second the price rises back to what they originally paid, they sell just to break even. So that old safety net becomes a literal wall of selling pressure. Solana needs to cross $80 to rise, but if it risks falling below $63, things get ugly.
If you're holding these assets or even just watching from the sidelines, this is why these zones matter so much. You aren't just looking at random numbers flickering on a screen, you're watching a market tightly compressed between strict technical boundaries. Patience is key right now.
Exactly. The entire market is holding its breath.
Which brings us back to our break and seesaw. If Bitcoin and Ethereum are failing to follow the tech indices this year, it leaves you wondering, are we witnessing a permanent identity shift where crypto stops behaving like a tech stock and becomes something entirely different? Definitely a provocative thought for you to mull over while you watch those charts.